Welcome back to Lunch at the Market. We're certainly excited for options expiration this Friday. On Friday's episode of Options Action on CNBC, Mike host had a great reminder on the show to buy back the cheap options that you're short. This morning, we're in our portfolio, taking those spreads we sold off the table for 2 and 3 cents. In this market, there's just no reason to leave those short options out there if you can buy them back for a few cents. We've declared victory in Netflix and Freeport-McMoRan put spreads and took them off the table this morning for 2 cents apiece. We'll start looking for September positions to be put on this week so that when our August positions roll off the books, we generally like to sell put spreads on nice down days. That way volatility gets pumped up and you can get a lot of the downside out of the way. If you sell puts on a day like today, you'll find that you can have taken much more in on the trade and been able to sell a strike that seems completely irrational. Take Apple for a great example. When it traded down to 240, we were able to sell the August 230, 220 put spreads after the stock had just been at nearly 280. Down at 230, this would have been a decline of $50 a share, or about 20%. That's a pretty terrible decline. So for us, that was the perfect time to put on the trade. The only put spread we see on our radar today is Hartford Financial Services, symbol HIG. If you look at September options, you could sell the September 19, 17.5 put spread for around 33 cents, or you could widen the spread to 19, 16 and take in 50 cents. If you want something with less risk of ending up in the money, you can also drop down the 17.5, 15 September put spreads, and that should get you done as the stock is going to have a decline over 10% to put you within 50 cents of being in the money. The Hartford is pretty strong after being one of the few insurance companies that opted to take TARP when times were scarier. They have a terrific lineup of life insurance products, and they also have an asset management business with the Hartford Mutual Funds. The company has been around for nearly 200 years and has seen just about everything. The stock trades with a forward PE of 5.54, a PEG of 0.76, nearly $42 billion in cash, and only $7.11 billion in debt. Don't forget, they also have the boring cash cow of their property and casualty business that does homes, auto, and commercial insurance. They are huge in the senior market for both P&C and annuity and life business. Their cash flow is nearly $10 billion, so we think the trade on HIG is a bullish one. So you can either sell the put spreads we looked at, get long the stock and buy some puts, do a 1-by-2 ratio spread where you get long the 19 strike put and then sell 2 17.5 strikes against it. You'll get long the stock below 17.5. You can also look at buying the January 2011 20 strike calls for around 275, or the January 2012 22.5 calls for around 395. Take a look at HIG. Just a reminder, when volatility wanes like it is today, this is your opportunity to get long puts on stocks you'd like to hold on to. Names like JP Morgan, US Steel, BHP, Monsanto, etc. that are some of the world's best companies can be held on to if you own protection that will give you a way out should something go drastically wrong. Don't forget to check out the new videos we have on the YouTube channel. We've been talking to people all weekend and everyone is raving about Being Naked video. Not sure if you have to get an account on YouTube to comment. That may be what keeps people from leaving one. But people, seriously, you can share it right on our Facebook page and comment from there. And don't kid yourself, we know you have a Facebook page. About 500 million people do, and the rest of the world, most of them don't even own a computer. Thanks again for tuning in. Have a great day, and press your buy button on some puts, that is. Have a great day, and we'll see you tomorrow.